Dividends are a fantastic source of passive income because you get paid every single quarter, every single year, and that money cannot be taken away from you, and you only need to hold the stock. In this video, I am going to tell you the 2 best dividend stocks in the market. But before analyzing those stocks, I want to say that when I look at a dividend stock, I am looking mainly at 2 characteristics. I am looking for companies that have a safe dividend. This means that it eats out less than 50% of their free cash flow, because dividends come from free cash flow, and I want to make sure that the company can afford to pay that dividend, because if the company cannot afford it, it will cancel the dividend. Number 2, I am looking for companies that are undervalued and have potential share appreciation. So not only I want companies that pay you money every 3 or 4 months, but also that their share price can increase over time. Stock number 1 is Walgreens. Walgreens is a pharmaceutical company, and what I like about this company is that they pay a 5.5% dividend, which is really high, as the average of the S&P is 1.3% dividend yield. And as I have mentioned before, it's a safe dividend. In terms of share appreciation, I definitely think this company's share price can increase in the next few years. As you can see in my Excel spreadsheet, which tells me at what price you should buy a stock based on the assumptions you put in, it is clearly undervalued. According to my high assumptions, you would make 32% every year plus 5% in dividends, which is a lot. But what I like about the valuation of this company is that even according to my low assumptions, in which the company only grows 1% a year, you would make 10% a year plus 5% in dividends every 3 months. Stock number 2 is HPQ. This is a stock that Warren Buffett owns, and they sell PCs and printers. I recently did a video about HPQ, so if you want a more in-depth analysis, you can check it out. They pay a 3.3% dividend, and like Walgreens, they pay it every 3 months. This dividend yield is going to increase a lot over time. As you can see on screen, they have increased their dividend yield every year, and this is not going to stop. In terms of share price, according to my high assumptions, you would get a 25% return on your money every year, plus dividends every 3 months, which is very good. And what I like about the valuation of this company is that even on my low assumptions, in which I have this company's revenue decreasing by 1% every year, you would still make 10% a year plus dividends. I hope you enjoyed the analysis on what I believe are the 2 best dividend stocks to buy now. Subscribe if you are new, and I'll see you on the next one.